Hey there, welcome to the mortgage rate forecast with Criss, your mortgage rates and news. It is April 20th, and let's get started with the charts. So check this out. We're at 102.94 this morning. You can see bonds kind of peaked out here a couple days ago and are starting to sell off. So we're looking at support below us at about 102.80, right where you see my mouse. But look at this. Our next line of support could go down as 102.40. So here's the thing. Our resistance is up above us at 103.15, but I think we're going to be testing our support first. So be ready for a little bit of a potential bond sell-off, okay? Jobless claims came out, slightly helpful for bonds today, but the Fed didn't help us. As far as the news, dollar's weak. That was good for us. With Pence being in Korea, some of the political news that's swaying people to put a little bit more money in bonds versus stocks. But we are seeing some sell-off, guys. Oil came in and is doing much better than expected, which isn't so great for bonds. And to kind of quantify where we're at, Freddie Mac in March reported the average interest rate was 4.2% and a half of a point. Bonds were trading about 101.90 back then. We're at about 102.94 now. That's about a little over $1 difference. So instead of someone paying a half of a point, someone might actually get some credits back. So things are still pretty good in bonds for this month compared to last month. And, for a while, we were seeing some of the best bond prices, lowest interest rates since November. So bonds did make some good rebounds here, guys. Anyway, so let's do our forecast. Where are we at? Well, the analysts are consistently bearish on the short term, and they're kind of neutral on the long term. The biggest concern is if we fall below 102.80, our next support is 102.40. That's about half a point worse. So here's the thing. I was right on with my forecast last week. Bonds hit it right on. We'll see where we're at. I'm gonna try not to be like too chicken little, too bearish. I'm gonna say bonds are gonna trade between 102.80 to 103.15. But guys, just be careful. I think we're gonna test this 102.80, and if we break below it, we could see the fees that one pays for their mortgage go up as much as half of a point. So just be careful out there, okay? And it's just not me saying it this time. It's actually the analyst saying be careful as well. So that's it for now, guys. If it's your first time on the channel, click on the other guy. That will get you subscribed, and you'll get a little alert when we do new uploads. And if none of this made sense to you, you can click at the top right. That'll take you to Mortgage Bonds 101, teach you the basics of the bond market and how it impacts you as a consumer. Anyway, that's it for now, guys. We'll see you next week. Take care. Bye-bye.